The International Monetary Fund downgrading global growth outlook yet again, folks. This time shaving another 0.2 off the outlook. Global growth now forecast to hit just 3.3% in 2019, and that follows a similar 0.2 downgrade from the IMF in January. All advanced economies were downgraded, including the U.S., the U.K., the euro area. Japan and China, though, did get slight upgrades from the January forecast, but not enough to keep the world from sliding further. The IMF said in its report, escalation of U.S.-China trade tensions, macroeconomic stress in Argentina and Turkey, disruptions to the auto sector in Germany, tighter credit policies in China, and financial tightening alongside the normalization of monetary policy in the larger advanced economies have all contributed to significantly weakened global expansion. The IMF also forecasts a decline in world trade, and it's unclear if at this point any trade deal now between the U.S. and China can stave off that slowdown.
Trade tensions were a big factor in the IMF's forecast. The White House issuing a list of European products that might face tariffs. The president tweeting today that the World Trade Organization finds the European Union subsidies to Airbus have adversely impacted the United States, and he explains that's why now the tariffs on $11 billion of EU products. The EU, he says, has taken advantage of the U.S. on trade for many years. It will soon stop, but maybe these trade wars, Steve, aren't going anywhere and may become semi-permanent, as Art Cashin said.
So, Kelly, a lot of market commentary sees the trade war as a temporary event. So the U.S.-China trade, they make a deal, the thinking goes, and that's the all clear for markets in the economy. But there are indications that we may be in for a more protracted set of trade battles. Call it a forever trade war that could last at least the balance of the Trump administration.
There has been improvement on the front between the U.S. and China, and a possible agreement in the near future. We are worried about trade tensions escalating in other sectors like the auto sector, and that would be particularly damaging given that it's a highly integrated sector for the world with large global supply chains.
Consider this. The U.S. steel tariffs are still in place with Mexico and Canada even after the U.S. struck a trade deal with both those countries. The U.S. wants to retain the right to put tariffs on China even after they sign a trade deal. And finally, just the past couple days, the U.S. threatened EU tariffs on aircraft. Autos could be next. The White House, here's some of the trade front stings that are out there. You've got aluminum already in place, auto and aircraft threatened. On the other side, still aluminum, washing machines, industrial goods, all still in place. Pivoting from a China trade deal to a trade battle with just replace one perpetual market concern with another. So we could really be just going one after another here and never get that trade peace, instead perpetual trade battles.